Hey everyone, welcome to this new session on GST filings. In this session, we will see what is GSTIN, what is the structure of GSTIN, and the compliance cycle under the GST. Also, we will see what are the different types of GST returns that different set of taxpayers are required to file. We will also see what are the different due dates of these returns along with penalties and late fine for non-filing of return. Before proceeding to the topic, let us first quickly recap what we learned in our previous session. So in our previous session, we studied about who all are required to get enrolled under GST. Also, we studied importance of GST registration and what are the threshold limits for getting enrolled under GST. That is 40 lakhs for goods and 20 lakhs for services. There is a reduced limit for special category of states, that is 20 lakhs for goods and 10 lakhs for services. Then we learned about mandatory registrations, that is who are the set of taxpayers who are mandatorily required to get registered under the GST as per section 24. So person executing interstate supplies are mandatorily required to get enrolled under GST. Similarly, casual taxable person, input service distributor, e-commerce operator, person supplying via e-commerce platform, person under the reverse charge mechanism, and non-resident taxable person all are required to mandatorily get registered under GST. Then we studied about voluntary registration and the benefits of getting enrolled voluntarily. Then who are exempted from getting registered under GST? Then what are the penalties for non-registration? And finally, we had an overview of the GST portal where registration process takes place. Okay, so let's start today's session. What is GSTIN? GSTIN is a 15-digit alphanumeric code that is issued by the department upon the registration of a taxpayer. GST is PAN-based and state-specific. Let us understand the structure of GST by breaking down the format. 27AA PM 0123C 1Z5. In this example, the first two character, that is a number, denotes the state code. So in this example, 27 is the state code of Maharashtra. The next 10 digit is the PAN of the entity. The 13th character, which happens to be a number, denotes the entity code. What is this entity code? Entity code is the number of registrations that the entity has within the state as on the date of registration. The 14th character is the default alphabet Z. It remains consistent throughout. And the 15th character is the checksum character, which is system generated. Okay, let us take one more example. GSTIN 07AA ECS 1234 A1Z2. Next, 29AA ECS 1234 A2Z0. Next, 07AA ECS 1234 A2Z8. So in this example, it is evident that the registrations belong to a single entity with a consistent PAN. We can see the PAN number in all these three GSTIN are same. So the first one, 07, is the state code of Delhi. So it's a Delhi based consulting firm. Second one, 29, is the state code of Karnataka. It is the branch of the same firm but in the different state. Then 07, again a second branch in Delhi. So in the third GSTIN, you can see the 13th character is 2. It denotes this is the second registration within the state of Delhi. So by looking at the GSTIN, we can decode the registration belong to which state and the number of registration that the entity is having in that state. Okay, so let's move ahead. GST compliance cycle. What are the different compliances that a registered taxpayer must do under the GST? First, daily transactional level, that is GST invoicing. Every registered supplier must issue GST compliant invoices. The invoices raised by the supplier of goods and services must contain the supplier and the recipient GSTIN. If the recipient is registered person, then his GSTIN is also mandatory. Then invoice number and date. The supplier of service or goods must raise invoices with distinct number along with dates. HSN or SAC code. What is HSN and SAC code? HSN stands for Harmonized System of Nomenclature and SAC stands for Service Accounting Code. These are used to classify goods worldwide. Next is GST rate and amount. There are multiple rates under GST and the invoice must contain the rates charged and the corresponding amount. Invoices must be issued before the supply of goods or within 30 days of supply of services. Next are the GST returns. Different taxpayers are required to file different returns as per their business. There are different types of GST returns that are required to be filed. Let us take up each return one by one. First one is GSTR1. GSTR1 is a return of outward supplies. That is, the taxpayer is required to disclose his sales for the month or quarter in the GSTR1 return. In this return, the sale data is to be bifurcated between B2B sales and B2C sales. That is, sales made to registered person and sales made to unregistered person. Apart from sale data, other informations are also required to be furnished in GSTR1. What are these other informations? Other informations like exempted sales or unrelated sales that are executed during the month or quarter. If the taxpayer is dealing in multiple goods having different HSN, all the HSN are required to be disclosed in this monthly return. Then different kinds of documents are required to be issued by the taxpayer like tax invoice, debit note, credit note, receipt voucher, payment voucher and so on. The details of these documents issued by the taxpayer are also required to be furnished in GSTR1. The due dates of GSTR1 is 11th of the next month in case of monthly return, and where the SSE has opted for quarterly return, it is 13th of the month succeeding the quarter. Next is GSTR3B. Again, GSTR3B is a monthly or quarterly return as opted by the taxpayer. GSTR3B is a summary of sales, input tax credit and tax payable. All the regular taxpayers are required to file GSTR3B within the due dates. If not filed within the due dates, it attracts late fee along with interest. So in GSTR3B, the sales data are automatically popped up from the GSTR1 that has already been filed by the taxpayer for that particular month. This form automatically fetches the data of input tax credit from GSTR2B. The due dates for filing of GSTR3B is 20th, 22nd or 24th depending on the states or quarterly return monthly payment scheme opted by the taxpayer. In GSTR3B, the final tax liability is ascertained by reducing the input tax credit from the total outward tax liability of the taxpayer. Only the net balance is to be paid then. So before we proceed to CMP08, let us first understand how GSTR1 and GSTR3B are interconnected. मैंने अपना GSTR1 within due date फाइल कर दिया, that is on 11th of May for the month of April. Similarly, मेरे जितने भी suppliers थे उन्होंने अपना GSTR1 within the due date फाइल कर दिया, that is on or before 11th of May. On 14th of May, I can view my GSTR2B. In GSTR2B, I can see what inputs I have accumulated for the month of April. That is, मैंने अपने परचेजेस के अगेंस्ट में कितने इनपुट एक्यूमुलेट किए ड्यूरिंग द मंथ ऑफ अप्रैल. आई कैन व्यू इट ऑन 14th of the May. आफ्टर दिस ऑन 20th मेरा GSTR 3B फाइलिंग करने का ड्यू डेट आ गया. मैंने GSTR 3B ओपन किया. GSTR 3B में जो सेल्स वाला कॉलम था वहाँ पे डेटा ऑटोमेटिक फेच हो गया फ्रॉम GSTR 1. वहाँ पे वही सेल का डेटा आ रहा है जो मैंने GSTR 1 में फाइलिंग करी थी. नेक्स्ट, इन GSTR 3B मेरा इनपुट्स जितना मैंने एक्यूमुलेट किया था, जो मैंने अपने 2B में व्यू किया था, वही सेम इनपुट मेरे GSTR 3B रिटर्न में आ रहा है. नाउ व्हेन आई एम गोइंग टू फाइल माई GSTR 3B, तो वहाँ पे मेरे सेल्स के अगेंस्ट में मेरा जो भी टैक्स लायबिलिटी बना, उसमें से मेरे परचेजेस के अगेंस्ट में मैंने जितना भी इनपुट्स एक्यूमुलेट किया था, वो डिडक्ट होने के बाद जितना बैलेंस टैक्सेस बच रहा है उसकी मुझे पेमेंट करनी है थ्रू द पेमेंट चलान. So this is how GSTR 1 and GSTR 3B functions. In between GSTR 1 and GSTR 3B, a new return, that is GSTR 1A, has been introduced by the GST department. The purpose of GSTR 1A is to allow the taxpayers amend any records that has already been furnished in GSTR 1 of that period, but this return can be filed only before filing of GSTR 3B or the due date of 3B, whichever is earlier. Informations like B2B sales, B2C sales, credit note, debit note, etc. can be amended in GSTR 1A. So next is CMP 08. CMP 08 is a summary statement cum challan for tax payment. In CMP 08, the taxpayers are required to declare their turnover during the quarter and pay taxes at the rates as per the services provided or goods supplied. For example, if I am a businessman having a restaurant and I have opted for composition scheme, then I have to declare my quarterly sales in the CMP 08 and pay GST at the rate of 5% on the total turnover without availing any credit. Similarly, if I am a trader, then I have to declare my quarterly sales in CMP 08 and I have to pay 1% of the total turnover during the quarter as the GST for that quarter. I am not allowed to avail any credits against my purchases. GSTR 4. GSTR 4 is the annual return for composition dealer. It is a consolidated turnover and taxes paid statement. The due date of annual return for composition dealer is 30th April of next financial year. This date has now been revised to 30th June of the next financial year. So, the composition dealer are required to disclose their consolidated tax and turnover declared during the 4 quarters of the previous year in his annual return. Along with this, the composition dealers are also required to disclose their inward supplies in the annual return. So next is GSTR 5. GSTR 5 is required to be filed by NRTPs. NRTPs implies non-resident taxable person. Any non-resident carrying on a business in India must file GSTR 5 declaring the details of their inward and outward supplies. The due date being 20th of next month. Next is GSTR 6. GSTR 6 is the return for input service distributor. Input service distributor are those who receives service bills centrally and later on distribute the credit against such service bills to its branches. So in order to distribute the input tax credit to branches, the ISDs are required to file GSTR 6. Then GSTR 7. GSTR 7 is a return for TDS deducted and paid. Government departments and other notified organizations are required to deduct TDS and file GSTR 7. The due date of filing of GSTR 7 is 10th of the next month. Next is GSTR 8. GSTR 8 is the return for e-commerce operators. It contains details of TCS collected, turnover, and the ultimate liability of e-commerce operators. The due date of these returns are 10th of the next month. Next is GSTR 9. GSTR 9 is the annual return for regular taxpayers. So the taxpayers whose turnover has exceeded rupees 2 crores during the previous financial year are required to file GSTR 9, that is the annual return. It contains the summary of turnover, purchases, input tax credits, and the taxes paid by the taxpayer. And finally, GSTR 9C. GSTR 9C is a reconciliation statement to be filed by the taxpayers whose turnover in the previous year has exceeded rupees 5 crore. This is a reconciliation statement between the books and the GST returns filed during the year. Next is quarterly return monthly payment, that is QRMP scheme. Under the QRMP scheme, taxpayers whose turnover hasn't exceeded rupees 5 crores are allowed to file their GSTR 1 and GSTR 3B returns on a quarterly basis. But the taxes are required to be discharged on a monthly basis after self-assessment. Any deficiency in the taxes for the quarter attracts interest. IFF, that is Invoice Furnishing Facility. Optional invoice filing for the first 2 months of a quarter. Let us understand IFF with an example. Suppose I, being a trader, have opted for QRMP, that is filing of quarterly returns, whereas one of my customer, Mr. A, have opted for monthly filing of return and monthly payment of taxes. In the month of January, I executed a sale with Mr. A. Now, since I am not going to file any return for the month of January, Mr. A will not get the input tax credit in the month of January against my invoice. Rather, once I file my return in the month of April for the quarter ended March, Mr. A will get the input tax credit against that bill. To overcome this problem, GST department have introduced the concept of IFF, that is Invoice Furnishing Facility, where a trader or a manufacturer who have opted for QRMP can furnish the invoices on a monthly basis. Next is CMP08, that is Statement for Composition Dealers. What is CMP08? It is a self-assessed quarterly statement filed by composition taxpayers. It acts as both a return and a challan for tax payment. Who should file CMP08? Registered taxpayers under the composition scheme as per section 10 of the GST. Traders with turnover less than 1.5 crores or rupees 75 lakhs or 50 lakhs in some states. Restaurant without serving alcohol and manufacturer except for few notified goods. So, under the composition scheme, the taxpayers are required to pay a fixed percentage of their turnover as a composition fee. The due date of CMP08 is 18th of the month following each quarter. Let us take an example of CMP08. Radha Electronics is a small trader in Gujarat with 48 lakh turnover under the composition scheme. For the fourth quarter, the due date of filing CMP08 is 18th of April. It files the return declaring 12 lakh as outward supplies. It pays GST at the rate of 1%, which comes to rupees 12,000. And no ITC is claimed under the composition scheme. So this is the overview of composition dealers. Let's proceed further. Annual returns. Annual returns has two components. One is GSTR 9, another is GSTR 9C. GSTR 9 is required to be filed by all taxpayers with turnover above rupees 2 crores. The due date being 31st December of the next financial year. GSTR 9 is a summary of GSTR 1 and GSTR 3B and the financials, that is the books of accounts. Then comes GSTR 9C. It is mandatory if the turnover is greater than rupees 5 crores. It includes a reconciliation between books and the GST returns. Any missing annual returns may lead to penalties and scrutiny by the GST department. Next is e-invoicing and e-way bills. Businesses with turnover of more than 5 crores must generate e-invoices for B2B supplies. E-way bills. E-way bills are required for transportation of goods worth rupees 50,000 or more. The data fed on the way bill portal gets automatically populated in GSTR1 returns to improve the accuracy and compliances. So the GST department charges penalties, late filing fee and interest in case of defaults in GST returns. Late filing of GSTR 3B attracts rupees 50 per day or rupees 20 per day in case of nil return. Incorrect claim of input tax credit, it attracts interest plus penalty plus the reversal. Means if an assessee claims input tax credit for which he was not eligible, the department charges interest at the rate of 24% along with penalty. Also, the assessee has to reverse the input tax credit claimed earlier. Late GSTR1, it attracts late fee of rupees 200 per day. Non-filing of annual return, it attracts rupees 200 per day plus restrictions on input tax credit. What is this restriction on input tax credit? It means if a taxpayer missed to avail the credit in a particular month, he can still claim such input tax credit in the subsequent month. But he can claim it only up to the month in which annual returns are due, that is up to 31st December. Once the due date of annual return lapses, he won't be able to claim those missed credits. Non-registration when required, rupees 10,000 or 100% of the tax evaded. Let us take few examples of penalties and late filing fees. ABC Enterprises, whose turnover is 3.6 crores, files under the QRMP scheme and pays tax via PMT06 monthly. It missed for 2 months. The late filing fee will be rupees 50 per day for 60 days, which comes to rupees 3,000. Again, XYZ Private Limited has rupees 6 crore turnover. It fails to file GSTR 9C. The penalty will be rupees 200 per day till the date of filing plus the scrutiny risk. Next, a freelancer in Delhi files GSTR 1 but skips GSTR 3B. It means he declared his sales but didn't pay his taxes. So no ITC for the buyer, supplier faces the buyer pressure and penalty imposed by the department. So that's it for today's session. Thank you.